Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. March 31st, last day of the quarter, markets are rallying again this morning. Even though the markets are rallying this morning, technically the market is still in a correction, pretty much led to the downside by the NASDAQ market. Now the S&P 500 looks pretty good. However, the problem is it's stalling and it's churning near the top. If you look at the chart of the S&P 500, it looks pretty healthy. However, if you note, all the updates we've had are in lower volume and all the down days have been in big volume. And this is also what's plagued the NASDAQ. In fact, the NASDAQ's been more intense. The selling volumes come in very heavy days and we get these low reaction rallies. And also what we've seen on the NASDAQ is we get these early morning rallies that pretty much fade towards the end of the day. So for now, it's kind of dangerous trying to go long in this market, although we're going to talk about a few positives that we do see going on. Now, what would make me go long in this market? Well, if the S&P closed above 1878, which would be a new closing high, that would signal the market's back in a confirmed uptrend. Now, the NASDAQ, we saw a follow-through day, and we're going to count last Thursday as the bottoming day. Starting tomorrow or next day after that, a few days after that, that would be a day on big volume buying where it closes near the top. Maybe the index rises about 1.25%, 1.5%. That's a follow-through day, and we may indeed be back in a confirmed uptrend. Now, another thing too is the NASDAQ pretty much came into 4125, which again is a 100-day moving average. And that's an average that's touched a few times. It's touched it last April, last June, this February, and it looks like it's trying to bounce off there again. But again, we won't know until the end of the day. This morning is a fake-out rally or the real thing. Now, the emerging markets were pretty much a drag on U.S. markets. Had a pretty good week last week, and you can look at the EEM, this emerging market index, pretty solid move. We saw that also in developed markets around the world. The EFA also was a drag on the U.S. markets. That turned up, so those things are positive. Now, we're seeing some new leadership in oil stocks. Biotech and tech have gotten crushed. We'll see if they bounce, but a sector that did perform pretty well last week were oil stocks. The XLE, the oil ETF, energy ETF rather, broke out into a new high. And with this, we saw stocks in the oil service sector, the big ones like Schlumberger and Halliburton, also break out. We saw a lot of the small explorers doing very well. Those are the ones that have some good growth potential. Those are like Continental Resource, Diamondback Energy, Matador Resources, Antero Resources. So a lot of those stocks are acting pretty well. Now, also the oil and gas machinery groups, stocks like Baker Hughes, Carbo Ceramics, also staging breakouts and moving higher. So we might have a theme here going into this next quarter where oil may provide the leadership. Now, I wouldn't chase it. I'd wait till we see a new signal for the market resuming an uptrend. That would be, again, whether the S&P hits a new high, or the Dow for that matter, or if we see a follow-through day on the NASDAQ. But up until now, I'd use extreme caution because thus far, these rallies have been sold into. So as always, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. And tomorrow's April Fool's, so have a good day. Bye-bye.